Hi there, everyone, and welcome to the NorthTech webinar series powered by Accubits. For centuries, mankind has used Polaris, our North Star, to navigate and explore the world. Inspired by this, the idea behind our webinars are to discuss technologies, innovations, and explore its impact on navigating us to a better world and a brighter future. My name is Shamir Taha. I'm the Chief Strategy Officer at Accubits, and I'll be your host and moderator today. This webinar series is an initiative of Accubits, an award-winning business transformation and engineering services firm focused on emerging tech such as AI and blockchain. In today's episode, I'm joined by thought leaders and experts in the InsurTech domain, and I'm really excited about the discussions that are about to unfold. Before we begin, let's have a quick round of introduction from the panelists who are here with us today. First off, Mr. Kishore, would you be kind enough to introduce yourself to the group?
Yeah, good evening, everybody. It's nice to meet you all. I'm Kishore Srivastav. I'm heading the IT operations in Al Udba National Insurance, Abu Dhabi, United Arab Emirates, and I'm taking care of complete business process automation, digital innovations, and all the IT areas in Al Udba Insurance. It's nice to meet you all and looking forward for the meeting.
Thank you, Kishore, and it's really good to have you with us. Next up, we have Dr. Robin Kiera. Hi, Robin.
Hey, how are you guys?
Good, thank you. Robin is joining us from Germany. Could you introduce yourself?
Yeah, I'm a recovering insurance sales agent, but don't worry, I've been clean for several years, but I know how insurance sales is done. But actually escaped the sales, even though I still love it. I love the people that work there. And now I have, through various sidekicks in consulting and marketing agencies that serves insurers and banks around the world, modernizing marketing, modernizing sales. And I'm also considered an insurance and InsurTech influencer. But fun note, when somebody called me that the first time, I actually need to look up if it's something good or if I need to send a restraining order.
Well, that's really good to know, and it's fun to have you with us. Thank you, Dr. Robin. Next up, we have someone who is literally burning midnight oil. He is up in the wee hours. We have Derek from Melbourne. First off, really appreciate you taking the time. Derek, could you introduce yourself to the group, please?
Yeah. Good evening. I'm Derek Harding. I'm a former Lloyd's underwriter. 25 years sitting in the underwriting room in Lloyd's of London. But now I'm out in Australia, and I've just taken over as CEO of a relatively small underwriting agency. So we're looking to grow our business, but we're also looking to take advantage of areas that haven't traditionally been part of the insurance landscape down here in Australia. So looking at hopefully some innovative new products, which is going to rely an awful lot on you guys who've got all the technological know-how.
Thank you, Derek. Good to have you with us. Next up, I'd like to invite Anshul Srivastav to introduce himself. He is a prominent speaker at many panels and conferences as well. Anshul, please introduce yourself to the group.
My introduction would be like I have been a change maker, so I would not call myself a pure insurance person, but yes, been in the insurance industry for the last, maybe 20 years, including the banking. Worked for Union Insurance here as a Chief Information and Digital Officer, transformed Union Insurance for many lines of business. Many lines of business were transformed digitally, but I still don't call them digital insurer. I moved on to start my InsurTech recently. Before Union Insurance, I worked for AXA for almost 9 years across Southeast Asia and India. So that was it. Worked in many parts of the world. Purely a tech guy, but insurance and banking has been part of my tech life. So that's a bit about me.
Great. And I'm sure you can lend a lot of insights into what we're about to discuss today based on your experience.
Possibly, because you guys have not given me time to prepare for a keynote. So, yeah, whatever is going to come out, you have to consume it.
Looking forward to it. Thank you, Anshul. And next up, we have Michaela Grosso. Michaela, could you introduce yourself to the group, please?
Definitely. Hello, everyone. My name is Michele. I'm the CEO of Democrants. Democrants is a B2B data-enabled white label software as a service technology platform that digitizes the sales and distribution verticals of the insurance value chain, mostly for emerging market segments. We are present in 13 markets across the Middle East and Africa, Southeast Asia, and Latin America. And we help insurers like AXA, AIG, and MetLife increase their digital sales and access new customer segments. I'm very excited to be here.
Thank you, Michaela. We are really excited to have you with us as well. So as you can see, we have a very interesting and diverse panel. This is really going to be fun. I'm personally very excited. Today, we're going to try and demystify and break down the barriers of InsurTech and look at innovations in the space from our esteemed panelists. So in the NorthTech webinar, we look for discussions and debates rather than simple Q&As. So I urge all the panelists to share their thoughts on the questions that will go around. So today, before we get into the panel discussion, we will have our first keynote presentation from Anshul. Anshul, over to you. The floor is yours.
Before I start, there is a caveat to it that the keynote presentation has its own set of limitations pertaining to the region as well as global insights are going to come in the keynote presentation today. But it's been compressed into a short presentation, and bear with me in terms of the data which is going to come out. We have to consume that data. So yeah. So I'm a big fan of data, so that's why I would love to share the data piece of it. So new normal, disruption in insurance, that's a topic I could select for this keynote. That's the beauty of giving a keynote, when you are allowed to select your own topic, not being forced by the organizers to have your topic. And I could somehow relate to the InsurTech disruptions which are happening across the world. So that's the topic, and what's in the lineup. It's like what's going out there, and in terms of around the industries, what's going on, and then what the second part of the presentation would be what's happening in terms of the insurance, which is disruption in insurance, and then a bit of a next action or a roadmap which I would love to propose for the incumbents to take it up. So yeah. This is how we've been evolving in last 300 years. But the way humanity is changing is humanity will change more in next 20 years than in previous 300 years. So that's the fast-paced change which we are bringing. And I always start my presentation with a powerful presentation on change. And that's why I introduce myself as a change maker. Let's have a look at the video, and then we can proceed on the presentation.
Once upon a time, business as usual was often good enough. No more. Where we are going, good enough is dead. In a world where everything is connected, where everything is equally excellent, where performance is reaching perfection, there's only one space left to innovate in: you. Right now, you are a central point in the raging tornado of change fueled by digitization, mobilization, augmentation, disintermediation, automation. Well, the list goes on. Science fiction is becoming science fact. Think about self-driving cars or computers that can learn and think. The way we work will never be the same. The skills we need will be dramatically different. Winning or losing are now happening faster than ever before. So what's your response? How will you discover new opportunities in one of the most transformational times in human history? Are you driving change, or are you being driven by it? Disruption has become the new normal. With change, it's always gradually, then suddenly, well, things really have stopped happening gradually. This change is exponential. Everything that used to be dumb and disconnected is now wired and intelligent. Cars, cities, ports, farms, even our bodies will be wired with sensors and will talk to each other. These game changers are also combinatorial. They amplify each other, creating a perfect storm of change. Quantum computing fuels big data. The Internet of Things fuels artificial intelligence and deep learning, which fuels robotics. However, anything that cannot be digitized or automated will become extremely valuable. Human-only traits such as creativity, imagination, intuition, emotion, and ethics will be even more important in the future, because machines are very good at simulating, but not at being. Yes, robots and software will do some of our work, but this will allow us to focus on things that cannot be automated. To imagine change squared, you've got to start engaging more with what might be, not just with what is. Immerse yourself in the immediate future, 5 to 7 years out from today. We need to go beyond technology and data to reach human insights and wisdom. Technology represents the how of change, but humans represent the why. The future is about holistic business model. The opportunity is to be liquid, to learn just in time, not just in case, not single improvements, but complete transformations, not individual systems, but new ecosystems. Humanity is where true and lasting value is created. We will engage, relate, and buy things because of the experiences they provide, because of their transformative power. The future doesn't just happen. The future gets happened. The new way to work is to embrace technology, but not to become it. The future is in technology, yet the bigger future lies in transcending it. Let's live and lead from here.
This is a very powerful video, and you can see that what happened if there was no change. I don't have to go with the numbers, and this slide is very, very common across. You'll see that 80% of Fortune 500 since 1955 are gone today. 52% of Fortune 500 firms since 2000 are gone. In next 10 years, 40% of Fortune 500 will be gone. So, these are studies which are there. And, the businesses are taking a different meaning and different shape and form if they are going around having a change. And this is what happened to guys who were not interested in a change. See Circuit City, Blockbuster, Sears, Toys R Us, Kmart, all these have completely are out of business. So, this is also coming in the industry which we are in right now. And what has been the change which has come in last two and a half decades? The evolution of, say, social media, the way the data is getting sourced in. Now, again, that video talked about the way the transformation is taking place and we being part of that change. And this is how we are. And internet just celebrated its 27th or 28th birthday. So, it's not that old. Things have changed completely the way we were. The only thing which insurance industry did was not going for a bigger changes, and being part of the industry, I've seen it from the inside. So that's one thing which is a bit laggard in terms of pulling out change. And you can see, people on the floor must be knowing GAFA. GAFA is Google, Apple, Facebook, and Amazon. And see what they have done. They are getting into every other industry they are in. They can think of. Today we have Facebook having 50 banking licenses, Amazon entering in insurance, Google entering the insurance as an intermediary, but later on backed out and then again re-entering into a different way. Why? Because they have all the data in the world, and they are big techs in terms of the volume and the speed they can get into any markets or any industry or a vertical. Check it out. I mean, from the slide, you'll see telecom and IT, they are there. Financials, they are there. In Google Pay, Apple Pay, wallets, all financial services, they've already entered. I mean, you can go and check it out that Amazon Pay, Google Pay, Apple Pay are already there in UAE. UAE being a bit laggard in the financial services transformation or change, still is going through a massive shift now, and definitely after COVID. So, I mean, most important, and this is a slide which talks about, I mean, I put more time onto it just because the change which is happening maybe you were saying because there are 7 forces at work. And this slide is a slide coming in from McKinsey. You will see that the way things market is shaping and reshaping, there are new pressure on prices and margins. When your products are commodity products, especially in insurance, and majorly, I mean, the ones which get sold are commodity products. And commodity products are up for pricing war if you're not putting a variation to the product. And that's where the insurers globally are having a shift. If they are sitting on the same product, I mean, God bless them, they will not be there anymore after a while. Competitors are emerging from unexpected places, like companies like Lemonade, Root, Metromile, Marshmallow are coming out from anywhere. I mean, they were not there. And the best part is they're exploring the unexplored. I mean, again, repeating, they're exploring the unexplored. They are looking at the markets which have not been captured by insurers. So they're emerging from unexpected places. I mean, and they are making a massive difference with definitely data. They are into a playground of data. They are using technology to build data. Winners are taking all dynamics, a plug and play business model. The most important thing is global growing talent mismatches. Now, digital is most abused word in the parlance. I mean, I still am yet to find a traditional company becoming a digital company in this world. I haven't come across any. I have done decent research. I mean, none of the traditional companies have been transformed into digital just because the way they are structured and the legacy they carry. So just because one of the key reasons of not being into digital format is talent mismatch. Digitally born companies are taking the world by a storm, and you will see that because the talent there is completely different the way the talent is in the traditional world. I mean, if I take an example of a region, Policy Bazaar or Yalla Compare, people who have not been from insurance have started these companies, and they've taken things by storm in distribution. Same is happening. So traditional players definitely carry a good amount of baggage, and that's where talent gets mismatched what the new age company requires. So yeah, I mean, these are the 7 forces at work which is making a massive change. And you are seeing that, I mean, the way COVID has taken the world by storm, you'll see a fintech moment coming in for InsurTech as well. And that's where you will see now the evolution of good amount of InsurTechs are coming in the west part of the world and gradually picking up in the east part of the world as well. Middle East, there are players coming up. Democrats, Michael is one of the guys who's making a massive difference in Middle East and the other parts of the world. But you are seeing a massive difference coming in the InsurTech as well. I mean, I was just reading recently that there have been $25 billion worth of investment which have gone in the InsurTech in first half of the year, which is huge by any means. You will see the players who are not related to insurance, they are getting, like Amazon. Amazon is in the insurance business. Google to end Google Compare, which was like aggregation business, but not its focus on insurance. Paytm, one of the largest wallets, or in fact, the largest wallet in India, is already having insurance license of life, PNC and health. So Paytm is having tons and tons of data on payments. Now it's going to encash on the insurance part of it. And they are not going to sell the products the insurers are selling. Like Zhong'an in China has sold maybe 20 billion policies in last 6 years, which is a huge number. And I mean, if I have to calculate by population, so every hand in China would be having 1.6 billion population would be having Zhongren, 3 or 4 Zhongren, or rather 7 and 8 Zhongren policies. And they are not traditional insurers. So, I mean, a massive shift is happening, and you'll see it in all value chain, right from distribution to underwriting to claims to other value chain operations of insurance. The biggest problem, and Robin can always second to me is on this, is like insurance was always sold, never bought. And insurance is a very dry subject. So loaded with legalities and loaded with, I mean, it was never an impressive thing to buy. US market has been one of the evangelist market in terms of insurance because their insurance is actually bought. But other parts of the world, the penetration is so low that, I mean, insurance inclusion will take a hell lot of time to actually grow. So, I mean, insurance was always sold, not bought. So just because there were the products and the services were never lucrative. I mean, unless you are forced to buy like motor insurance or health insurance out here in UAE, people will not go and buy. People are being sold. So that's and the worst thing we did was we never respected data. We've been in existence for a couple of centuries, and we never respected data. So that's why we never created the demand what the people are going to need, why they are going to buy insurance. We kept on selling the same thing for, I mean, if I take an example of motor and health insurance in UAE, especially the motor insurance, I am sure last 40 years, the rating criteria has not changed. Plus minus here and there in terms of rate and discount will work, but rating criteria has not changed. So we haven't respected data. I mean, we never, as right from the actuarial side of the world to the operation side of the world, we never respected data, though we were sitting on a gold mine of data, and we created dirty data a lot. So we never respected data. That's the reason why insurance is never bought. Otherwise, we would have created a massive chain. With the COVID coming in, we can see a good amount of propensity to buy insurance has come in, and this is a research report which has come in from the Capgemini, which says that during the pandemic, you will see health insurance being bought plus of 8%, and this is a global research which they have done it. Life will have a growth of 7%, and you will see PNC taking a good shift of 6%. But on a long-term basis, this would be more or less the same, because then COVID has created a fear, and insurance has always been a subject matter of fear. I mean, you create fear and then people go and buy. And insurers, on the other hand, have always waited for disasters to happen. If disaster happened, then they push their products. And that's when, I mean, the COVID happened and the health was like in the most demand. I mean, definitely people will agree and disagree with me, but yes, that's the reality I believe in. And that can be backed up by data. And why customers are willing to go big tech or tech way. I mean, big techs are around. It's not far off when big tech guys or the big tech guys start offering insurance. Amazon has started in US. It's not going to be far off when they enter other markets with that, especially on the health side. They have all the data, and they have all the data of your. Google knows there are some 40 odd people out here, 45 odd people in the forum today to listen to my presentation. So there is chances, and customers are willing to 50% of the customers are willing to buy insurance from big tech, InsurTechs, and non-traditional players. So non-traditional players like Root, Metro Mile. I mean, there's a massive growth trajectory you can see in the car insurance side and the health insurance side, wherein because of the COVID, people have not driven their vehicles, and if they have not, then why they are paying premium? So pay per kilometer or pay per time insurance is getting very prominent. 30% of the customers have tried and are very likely to use big tech InsurTech or FinTech during the pandemic when the carriers didn't deliver expected CX. So, I mean, insurance carriers have not given a good experience. I mean, if you look at it, there is no convenience. There is no advice coming from insurers. Products are pretty standard and people are sticking around that and they're still not changing. So the InsurTechs and the big techs, the way they are coming in is more on the personalization side. I mean, a good driver pays the premium for a bad driver because they always get bracketed into the experience of a loss-making customer, and then the penalty of bad driver goes into good driver. Same goes with health insurance and life insurance. I mean, the mortality and this lifestyle or these the way people have their wellness stuff done, health insurance and the life insurance have been rated and not much of change has come in. So that's where the shift is massively happening. You will find full carriers in the US and Europe are maturing, and you will see full carriers like Root, Metromile, Marshmallow. These are full-blown new age insurers who have come in, and there's a massive steep in their funding and in terms of their growth piece of it. Same in Europe. You are seeing that funding is a bit on a lower side, but in US the funding is massively high. Distributors in US and Europe, you'll find there is a decline because distributors are more maturing in terms of or consolidating, like the aggregators and all online aggregators. There is a consolidation happening. And simply the enablers are getting a bit of a steady, but full carriers, you are seeing a massive jump coming in terms of InsurTech. So full stack insurers and enablers are on a disruption. You will see 2020 to 2024, there's a CAGR growth of 36% for full stack insurers who are pure technology driven insurers. You will see a CAGR of 36%, and 2022 insurance sector expected in technologies are going to go up by $255 billion, which is massive. Partnerships are happening. You will see good amount of partnerships happening in PNC space. The PNC space, especially on the auto insurance side and home insurance side. Big players like you will see big insurers are shaking hands with the new age insurers like Lemonade or Root Insurance or Metromile, and new offerings are being taken up. The improvement, the time to market products are taking its own shape, and there is definitely improvement in customer experience. Now, how do you, as an insurer, should be creating your policy, best practice, and framework for real-time digital ecosystem to be created? So where we go from here, I'll rush into the slides from here. Let's get started. We have to collect a huge amount of data, do a research from the insurer side of the world. The inclusion of financial systems, including the banking, financial services, and insurance, can only come when it gets into the core of education system. Many countries in the world don't even teach the finance or financial services to any of during the school days. It has to get it down to the education level. Skills have to be restructured and have to be taken up. Like right side of the screen, you'll see. I mean, we never for a fair selection, everybody has to take the same exam. Please climb the tree. So which is like, how will elephant climb the tree? So yeah, I mean, there is disproportionate kind of a setup out there. For a roadmap, set direction with data sets. Most important thing for now for the incumbent insurer is respect data. If they start respecting data, they are going to get into a right track. And that's where the roadmap which they are going to carve out is going to be more sane, more sensible, and more reliable, and would help them to last more. Create partnerships, work with InsurTechs, FinTechs, Every other industry is now in a fintech. I mean, a week back I was reading the biggest revenue for TikTok is coming in from the lending side. Can you believe? A video online video sharing app is making the maximum revenue out of lending. Unbelievable. And you never know where TikTok is going to come in from, where it's going to come in from. In insurance, suppose. WeChat does 20 billion or 25 billion dollars worth of red envelope transactions during Chinese New Year. WeChat is a messaging system. WhatsApp payments have come in, and they are very soon going to be there in UAE as well. Create a culture for all, which means you have to nurture a lot of skills and reskilling within your setup. So as an incumbent insurer, you have to imbibe a kind of a change culture. And if you're not doing it, I think that you are heading for a disaster. And once you have the data, monitoring is more important, how you structure them and monitor them. Create a lab, collaborate with fintechs, insurtechs, whatnot, startup ecosystem. You should be partnering with, funding them. That's one thing you should be doing. Define a fail rate. For Tata's, fail rate is a gold mine. I'm just rushing. It took time, I believe. Move fast and break, and take half chances. You have very less reaction time because the market is evolving. Reaction time to make a change is gradually on a massive reduction. Challenges, you will see people don't have an understanding of an overall landscape. People do work in silos and isolation. Internal politics is one of the major things which never pushes for a change. Fear of failure. And when you sit on the board, everyone asks, what's your business value and ROI? People don't know to what level they can fail. And if they fail, what is the recouping back? Slow to embrace change. And the biggest challenge is leadership support. It's not there. That's one thing which takes a massive hit back. My 10 commandments: don't try to do everything at once. Think big, start small, act now. Socialize and democratize support from all stakeholders. Continuously monitor new technologies and test them. Collaborate, iterate releases. Strategy in place, culture shift across. Planning is essential. And the last and the most important is be the change you want to see in the world. Stay hungry, stay foolish, and thank you.
Thank you, Anshul. That was really insightful. Thank you for those valuable suggestions as well. Mm-hmm. Before we continue to the panel discussion, I'd like to invite our fellow panelists as well. If you have any thoughts, any comments on Anshul's presentation, any questions?
I have a question. You said an insurance product is being sold, not bought. My question is it necessarily the case? I would say, isn't it funny that people need to be convinced of buying things that could save their lives, health insurance that can save their financial situation, like life insurance, term life insurance, or also P&C products, but people stand in line for such a thing, a cell phone that's going to be broken in 2 or 3 years anyway. So, and at the same time, we as an industry, we spend billions and billions of dollars in marketing. Maybe, just a maybe we do it in the wrong way. So that's my big question is, do insurance policies and insurance products really need to be pushed into the market?
Yes, definitely. I believe so, because protection is something which is a human right. I mean, we do, check out why people have defense in their country, to protect their citizen, right? So insurance is also a protection, and it is just not something which has to be consistently pushed. I should go and buy. I mean, the way embedded insurance is coming out, I was reading when I was in fact in Singapore, People sitting on a Grab car sharing, they get personal accident and critical illness there for the ride. So personal accident for a Uber ride is there. I mean, if something happens to me, and it comes with as an embedded form. Today, protection should be a human right by default. It should not be a push that you have to buy a auto insurance for the safety of the roads, for the safety of that road of the country, or you have to buy a health insurance because your health bills are going to be way too high and you'll suffer in case you don't have an insurance.
Yeah, just to add on that, I agree. I mean, I think it's all about the how you design the product and how you market it to customers. I mean, for example, last year we launched with AXA here in the Gulf an insurance product for migrant workers and nannies, and we have linked it during the lockdown with a telehealth service. And literally, demand went through the roof because people, they were worried about their life and their health, and they wanted to have access to, like a doctor, and they couldn't. So little changes in product and design, in customer experience, in delivery, that can make the change from push to pull the customer towards you.
And I would add to Mikhail's point of view that we are sitting on a goldmine of data. And both insurers and banking world is sitting on a goldmine of data. We never respected it. I mean, a citizen. I'll take an example. I mean, you go for a medical test here for every time visa renewal. My health insurance should get tagged to it. Why I have to be a bracketed age wise? 3 parameters my health insurance get tagged, but in fact it should be so personalized that it should be basis my body DNA kind of stuff, not because of somebody else's bracketing. Yeah.
One point I would like to highlight here is that was a very good presentation, Mr. Anshul.
Thanks, Kishore.
One point I would like to highlight is the difference between the traditional players and the new players coming into the market. Yes, new players coming into the market, they have the wonderful ideas coming in, they're pitching in the ideas. Yes, we are giving, based on the past experience, what we had in our company, I'm just explaining. They come with the wonderful ideas where we are giving them the project. At one point of time, they're getting distracted by either the lack of ideas, okay, or they're getting stopped by the budgeting constraint. Okay, these are where traditional players, they have the wonderful visions, they could sustain in the market, whereas the new players who is coming into the market, because of the lack of ideas at one point of time, we are able to continue further on that. So that's why the traditional player, we can trust on them and we can move across.
That's interesting. And on that point, Mr. Kishore, being the IT manager at AFNEC, you probably are noticing technological transformations happening in the insurance domain on a practically a day-to-day basis. So what are the InsurTech trends that you're seeing catching up in the industry?
Yes, thank you, Mr. Shamit. Yes, when it comes to the new trends coming up, earlier customers, if you see, they are buying the policies through the static websites. The initial stage of the booming of this digital trend also, the dynamic websites like content management systems helped us to serve the customer in a better way. Now we are the very next stage of the digital trend where digital has become our day-to-day life. It has become the part of our day-to-day life. This evolution makes each customer as a unique with respect to their expectation. You cannot sell an insurance product across each individual. Like they will be expecting, I want this customized product. That's how the market works now. Okay, engaging them at this point of time with the old traditional work way will not work anymore. So we need to customize the product in intelligent, relevant, or personalized way by providing cohesive and consistent online experience that delays the customer. Yes, this product is only for me. That's the way we need to project to the customer. This is where the DXP, digital experience platforms come into the act. We have seen nowadays, we would have seen many e-commerce websites like Amazon, Noon, where if you go to the website and if you search for the product, next time onwards, when you go to the website, it gives you the product just related to all your searches. This is nothing like, this is the DXP I'm just discussing about, a digitalized experience platform. This is one of the things which is booming in the market. Next, coming to the omni-channel. In this competitive world, okay, insurers are providing multiple channels to interact with the customers, just like WhatsApp bot, chatbot, mobile app, e-portals, contact center, etc., unifying all the requests into a single channel. This provides, how it provides the customer is, this provides a seamless experience to the customer across purchasing the policy and further support. If you see in this pandemic time, okay, this has become the trend so that we don't lose both the customer or the business. If you don't go with the omni-channel basis, if you still stuck with that, yeah or no, I will not go with the digital transformation, as Anshul was rightly pointed out, we will be somehow lost in the market. We will be nowhere. That's how we will be going towards. So we need to adapt to the change. So that the omni-channel model will allow the insurance to maintain its competitiveness, retain its customer as well, and also the facilitate growth. Next thing, as Anshul was referring, that predictive data analysis. It is a core of any decision making where you can study the present and historical data to predict that future trend. And also it helps us to grab the market by implementing cognitive solutions like it also helps us to identify multiple areas like self-evaluation for our internal operation, like automations, where we need automations, what are the campaigns you need to go with in the digital marketing. We can identify the fraudulent transaction in the claim side, and also reducing the risk in the underwriting. Just like if you see the property insurance business, we might insure many buildings across. If you just capture the geo coordinates, you can, through the risk accumulation process, you can identify which are the areas I'm insuring more buildings. Through this, how you can help us is you can either increase the loading, increase the premium, or if there are so many buildings, you can decrease give the discount. Okay, this area, it's okay, I can give the discount. How it works? If I have the predictive data analysis in my system, I can just give the data. And next is the ecosystem. Historically, insurance companies are self-contained only on selling policies. But in contrast, ecosystem are much deeper set of interwoven relationship across a particular domain with governance and technologies that deliver values of customer and also the profits to the insurer. Okay, this model just begins with putting customer at first, not insurance company at first. It put customer needs first and also its desires first. So it seeks to create the desirable buying experience. Okay, to succeed, insurance companies needs to, what we are doing is we need to refocus externally in every part of the organization. And the last 2 points I would highlight is chatbot and mobile app. The trend has completely changed now in the way of purchasing the policies from the day where all the customers we used to come and line up in the insurance company. Now, thanks to the digital evolution, what has happened? Everyone is carrying the digital world in their hand. This AI-powered chatbot, WhatsApp bot, mobile app can interact with customer in an easily and simple language, which makes customer to comfortably, just like they're dealing with a human agent. Through this model, we can even avoid unnecessarily waiting time on any of the requests. Also, user can receive any immediate support or feedback on whatever their questions, queries, or reporting any claims, anything that it can be easily happen. And final thing is the cyber security. In the pandemic situation, the cyber security has become one of the biggest threat for any organization. As much you are investing on the digitalization, we are liable to invest same budget on the cyber security to have the reliable and secured infrastructure. The traditional way of rule-based production is no more volatile. We are in the situation where we need to protect both the users and their devices based on the behavior which is unique. To overcome this, how we need to have the user and entity-based system, behavior system, which is enriched by AI and machine learning. And I'll just finish up with the one last point, out-of-box thinking. This, as the trend changes, we also need to adopt accordingly and should not go with the traditional way of thinking. This AI and ML-based implementation on claim system, which we have done in the past, automated estimated identification, e-survey, fraudulent direction in the claims. These are the trends which are going towards which is happening in the insurance market, which we are one of the companies to implement at the initial stage. That's how it works. Thank you, Shamil.
Thank you, Kishore. Now, I think the panelists also, I think Anshul also mentioned that there is a challenge in people, being traditional and trying to digitize. Now, there are obviously challenges in an insurance company to adopt emerging tech, right? AI, blockchain, deep learning. What are the usual challenges and what are the blockers and what can be done to make that transformation smoother?
Well, let me touch on that. I think we all agree, and a lot in the audience will agree on the trends, on the changes in customer behavior, on the trends, on technology that's available, mobile apps, chatbots, as we just heard from Kishore. But what I'm asking myself is, why are we as insurance industry not doing it? And why are we not doing it? We regularly do studies on the presence of large insurers here in Europe on social media, for example. And sometimes C-suits come to me and say, Robin, we are now on social media too, and we're talking about multi-billion-dollar companies. And they say, we are also now on Facebook. And I'm like, yeah, but that's like dead 10 years ago. That was have been the place 10 years ago. And now they are there. While other platforms, somebody mentioned TikTok. I think in Anshul's presentation, you mentioned TikTok. That's the place to be if you want to be in contact with the B2C customer. And by the way, I think in 2 to 3 years also with the B2B client. And what I say in your question was what to do. In our experience, we help insurers and banks around the world with, implementing change. Our experience is it's not the intellectual limitations. We have super smart people working in the industry. And I know when I'm on stage and giving a keynote, sometimes it sounds like otherwise, but we have super smart people in our insurance industry. There's no doubt about it. Also decision makers, C-suits are not stupid. But the big thing is, I think it's a lot of people do it their first time, a large transformation project in the insurance. So that's a lot of employees do it the first time. So they're not used. It's like me, my wife sometimes puts me on the marathon, say, do you want to run a marathon? And then she, actually registers me for it, but I'm not prepared because I don't train. You don't tell her, but I don't train. So I think that's important to understand that we need to also train for innovation and for change. And it sounds not cheesy, but it's the truth. If you and I think that's one of the main obstacles to use these opportunities. And I'm happy to talk about chatbots and apps and all of that, but if you cannot even upload a decent picture or a modern cut video through channels like LinkedIn, YouTube, TikTok, Instagram, let's please not talk about AI or chatbots or anything. Why? Because you don't even cover the basics. Like if you get, say, Robin, you need to run the Olympics. I cannot even run the half marathon in Hamburg. Don't talk about Olympics. But I think there's hope. With smart people in the industry, we have a lot of people that are very know about the practice of the industry. The tools, technologies are out there. We just need to get them into the houses, into the large insurers around the world. And I see great examples of insurers in all different ecosystems. You have first movers, you have people who really do it and push it. Mostly, and that's my main realization is, mostly it's all about the leaders. When the leaders want it, and let me explain, there are 3 types of leaders I see, at least in Europe, where most of our clients are. First, young and hungry. Okay, C-suite is not hungry anymore, but it's like young and hungry from the mindset. They know they need to work 10, 15, 25 years. If they continue like that, it's not going to be. Then we have senior decision maker who is not young and hungry anymore, but who says, I don't want to be that C-suite that ran the thing into the ground. And then they intellectually understand it, what to do, and then they get the expert inside, outside, and push for that. And the third one is in the middle. Not very old, not very young, but who just plays on the defensive. Also because he or she maybe do not have the competence to do it. And I think we need to focus on these two, and the senior decision makers that intellectually understand what to do, help them, and the young and hungry ones who implement the change. That's my expression here in Europe.
Shamir, if you allow me, I will also add up some points on what Mr. Robin has told on this point.
Sure.
Okay, when you talk about this usual blockers, what we have is that finding the right solution to the right problem will play a major role in the success of any technology, whatever digital transformation you do. Finding the right solution to the right problem. You need to have a clear vision of which technology and which area you're going to automate. On the day one, you cannot plan to digitalize all your system process at once. We need to identify the key risk area, mitigate the plans with a proper progressive implementation strategy. And the next biggest blocker what we face, not only me or everybody, is to sync the user in line with the digitalization. We need to have the frequent training program, follow-up session to overcome this challenge. Ultimately, end user have to be benefited out of whatever digital transformation is. Yes.
Sorry, one more thing you said, training. I think it's so important. It's like if you get, put into the jungle, who do you want to have at your side? Crocodile Dundee or the guard from the zoo? Nothing against guards in the zoo. Brilliant people know a lot about animals, but I choose Crocodile Dundee. And the funny thing is, if we look at the core of the industry, which is the sales organization, they are super practice orientated. I mean, we take everybody who's able to sell, we train them, they're training calls, they're training consulting things, but we are not training innovation. Isn't that actually ironic that, in the core, we're training a lot in the sales department, but we do not train in innovation? And my question to all of you is, what should, and your best practices from around the world? I mean, we have Melbourne, we have UAE here. What kind of tips and tricks do you see in your markets?
Well, I think there's some interesting issues around that with people at the sales point actually being disconnected from actually the data and how the business's profitability drives out. And this is one of the key things that I see in a relatively small environment down here in Melbourne. But there's so much data that comes our way. We're an industry that probably has 300 years of data. Yet we're not very good at actually managing that. And when all of a sudden we're about to get a whole raft of real-time information to add on top of that, that's going to require a very coordinated strategy for anyone to be able to deal with that level of new innovation coming in over the top. I mean, if you look at things like pricing models and earthquake models, all the natural catastrophes, they're pretty much what we term set and forget, in that they're priced up, they're done a certain way, and then they're never touched again until they're proven to be incorrect. And then we're going to throw a whole load of real-time data to our salespeople to sell on top of that. It's going to be a real piece of work to actually connect those two to stop companies going bankrupt, which is why there's actually, from the C-suite, as you mentioned, Robin, a bit of a suspicion of technology. Do you let technology run, pretty much amok and give it its head? Well, insurance hasn't ever done that. Insurance has been very controlled over how it deals with technology up until now.
I agree. In fact, Derek, be it sales or claims processing, real-time information and real-time insurance products are becoming like the hot rage in the insurance sector. How do you think the insurance sector is reacting to this changing landscape, especially when it comes to real-time data and information?
Yeah, I think insurance itself with its traditional markets are not great at it. And it's something that, insurance looks backwards. That's what it does. It looks on earthquakes that have happened in the last 10,000 years, floods that have happened in the last 100 years. And that's how it comes to its pricing and how much risk it takes on. That near-term thing that's going to come from it, so things that could be happening next week, 3 times in the next 5 years, whatever it is that's going to come from that real-time data, is not something that we've ever done before. And I think this is where, for you in the InsurTech space, probably a lot of the innovation is actually going to be coming in from non-insurance markets, non-traditional capital. You're going to see people like the hedge funds coming in who are used to dealing with things in, almost microsecond bursts in terms of their trading. Some of that expertise is going to be brought into the insurance market because they have the people that are able to micromanage data and have instantaneous responses and amendments, which insurance really hasn't geared itself up for. I mean, as I said, an earthquake might happen only once every 10,000 years. Well, I'm sitting here down in Melbourne and we're currently in lockdown for the world record amount of time. What about if there's someone looking to provide cover against COVID shutdowns in the future? Well, it's a very short data set in insurance terms because it's only been going on for 18 months. And there's a whole load of things that are not insurance-y in terms of the elements that go into it. It's controlled by government. Well, insurance are not going to be able to manipulate that in a very quick space of time to come up with a product that might actually be something of value to business. But hedge funds and non-traditional capital that actually have those people, those quantitative analysis, sitting on the background, will be able to do that. And I think here's a key area where you may get a split in how insurance looks for you in the InsurTech space, in that the drivers and the leaders of this might not necessarily be traditional insurance companies, because they will be looking at other areas and still making a good profit from it. But there's going to be an innovative space where new products are going to come out as a result of real-time data that maybe the insurance market is not going to be quick enough to adapt to. But there are other carriers out there who will become insurance companies on the back of some of this. And we're looking at things down here on weather cover, on the size of hailstones, all sorts of things that we are looking to put into products. Well, the insurance industry is really bad at dealing with that. So we're having to talk to different markets to actually find someone who's willing to carry this. And what we're certainly seeing from our customer base is that traditional type insurance policy that covers earthquakes and floods, yes, they're interested in that because the bank makes them still buy it, but they're also very interested in the risk that they perceive on their balance sheet, whether it's changes in their debt accumulation, COVID shutdowns, whatever it is. It's things that traditional insurance policies don't cover, and they are actually quite key things to our customers. It comes up in nearly every conversation we have. And somehow we, and I mean this as an insurance person in conjunction with you guys in the InsurTech space, have got to be able to come up with a way that we can develop products that are going to take us through this century and not get left behind like some of the old insurance products.
Interesting. Does anyone have any comments on that? Anshul, did you want to say something?
Yeah, I mean, I completely agree with Derek in terms of the way the data has been. I roll back to the point what Robin was talking about, the Facebook piece of it. The biggest tick for the incumbent insurers is like, if we are on a mobile app and we have a website, we are digital. That's a tick. That's a tick. And today we have a Facebook page, and that's where we are digital. And all smileys and all thumbs up goes in there, and going, and that's why, and I have seen it happening in the boardrooms. So but when it's a KPI measurement of being digital, I don't know. They always take that my competitor has done it, I have done it, but it's not happening. That's and it's happening. It's not only in insurance and banking and elsewhere as well. And that's why you see there's a massive surge of payments, BNPL, buy now, pay later, wealth management, InsurTechs coming in, because they are solving the real problem.
I think you touched a super important point about we are just looking at ourselves. I recently had a discussion also about the use of social media in the sales force, and they said, we are here. Our market leader is here. So yes, that looks like what you can do, and this is great. But your strategy should not be beating the market leader. Your strategy should actually be beating the leader in the field, which is in a totally different industry. For example, we say Red Bull, the drink Red Bull is a company that does an amazing job on strategic content and social media and marketing, and really, they're buying soccer clubs over 10 years and putting it into the Bundesliga in order to get free advertising. I mean, that's a strategic plan. And what I want to say is I think it's super important. We need to look outside the industry. When I see one more announcement of a CTO changing from one insurer to another, I'm freaking out. Why? Because of the same money, we probably also could get the CTO of Google. Why do I say this? Because, and that's the great thing about in our industry around the world, in contrast to banking, by the way, we still have money. So we could buy all the stars of the world and make them actually do all the stuff we maybe not so good at ourselves. So my call to action is look outside the industry for trends. Look outside the industry for role models, for other companies. Of course, we cannot copy Nike or Adidas because we have different products, but, have the translation in our heads of what could we use of them. And also we need to hire key players from outside the industry. And every insurer that does that, I see, has over average return rates. One mid-sized insurer over here did it, led by a not radical, but very substantial manager. And what she did, she exchanged all middle management, and they are growing in growth rates that are unbelievable. And I think that's a way to go.
I agree completely. I mean, that's where you are going to explore the unexplored. And when you are going to explore the unexplored, you are not taking head on the market leader, what you talked about. You are actually making a shift and becoming a market leader where your market leader is not there. So you are creating a different market for yourself. And the time is here. You're sitting on a gold mine of data. Why you are not creating it? I mean, 10 years, 15 years back, data was not there. I agree. Data was in the form of paper, and you would not have the capacity and capability to convert that. But now it's right in here, in there. Make a change. And that's why, don't hire people within the industry because they come with the baggage.
Sometimes it's okay, or in a lot of cases that makes sense. In actuary, with 20 years of experience in P&C, does make sense. But if, for example, you are building a predictive analysis unit, it maybe makes sense to get somebody else. I think it's a mixture, to get a great mixture, and to only hire people from outside the industry is also not the solution, because I think you need to have great people. There needs to be knowledge about industry, about risk, about all the jokes we do at conferences and, only we laugh about. And all that's important, but I think it's a mixture and not, sometimes I have the impression we only hire ourselves. It's great. I made a career of it, but I think we need to get a great mixture.
Yeah, specialists definitely are fine. Like if it is an actuarial position, but actuaries have actually not done much in terms of pricing the product or creating a product. I'm sorry to say that. They're the same set of products which have been there for 50 years. They were the guys who were the numbers guy and data guy.
Yeah,
so,
actually,
So the products have not evolved. If the products have not evolved, our kids are not going to buy the same insurance what we have bought.
And I think that was Derek's super strong point, that the products of the industry have not evolved. We see sometimes a little bit a cell phone insurance here, a telematics tariff there. That's okay, but I've not seen like the tremendous big play. Maybe Oscar or Autonova in the health insurance, where they build a lot of services around a certain product. That's super interesting. But we will see. Do you personally see somewhere in your countries a product that really, really blew your mind?
UAE?
General, yeah.
I know from UAE to Southeast Asia, I haven't come across a product which blew up my mind. I've been monitoring the west part of the world, and definitely west part of the world is more evangelist in terms of creating new products, but products more or less revolve around the same spectrum of things, and data points are more or less the same. The moment you're out, regulator will come in and put the finger. So that's where, I mean, people in my presentation is like fear of failure comes in.
Yeah.
The worst part is we are in business of risk and we don't take risk.
That's really interesting.
Well, that's an interesting point on saying that we don't take risks, because one of the products I've seen is actually in the cyberspace, where an insurer provides you with a cyber quote with only 3 questions. And that blew my mind a little bit, because I thought, well, how can you actually understand an individual risk with only 3 questions? And ultimately, it's been proven that you can't understand that risk, because all of a sudden there's a dramatic repricing within that product. So somebody somewhere has advised them that that's an acceptable way to go. There's probably somewhere a chief technology officer said, yeah, this is an awesome idea, 3 questions. And maybe they will be the market leader. Maybe they will, because they've dragged so many people in so nice and easily. But they could have done all the damage in the first year or 2 and actually lost all their backing and support. So there's a much wider argument to this. It isn't just about the sales pitch. All of these companies that are involved in it have actually got to make money out of the products they're offering, not just have a supercharged sales team.
Interesting. Michaela, you've been working in the sector for quite a long time and have always been an advocate for digitalization and automation. What are your thoughts on this? How is the insurance sector embracing these technologies?
No, I was just listening, to the comments from Derek, Robin, Anshul, and even Kishore before. I'm not going to defend insurance companies, but they also have some struggles. So I mean, let's say that they want to launch this COVID disruption, business disruption insurance. Like to launch a product on a traditional insurance system. It costs them a couple of $1 million. Like if they want to sell by a non-traditional channel, because makes sense to to sell to customers of a telco, they cannot integrate with because their system is 25 years old. So I mean, it's not easy. InsurTech, they're really those enabler for like the digitization, automation of the industry. And it is indeed a new space, in our emerging markets. And what we see is that most of the insurers are at the very early stage of like automation and technology. And what we're doing at Democrats is moving them away from super traditional, highly manual brick and mortar practices to basic automation technology. Even something as simple as selling through, through a website or through the aggregator Anshul was mentioning. They cannot do it. And I find it very exciting to be in a market that is much less mature than Europe and the US, where there is a lot going on in the space. However, like markets like Middle East and Africa, you can definitely have some more impact in places like this. I saw now a question on the chat about examples of TikTok campaigns. The remittance program I mentioned before, in order to for remittance customers, for migrant customers, to know the product, we have used TikTok influencers. I'm gonna send now a campaign on the chat as well, and I haven't seen too much of that, in places like Europe or the US. And I mean, it's very exciting to be able to to provide products that people need, and through like channels that are not really the traditional insurance one.
Well, you said TikTok, the magic word, so I say a few things about that, because something I forgot to mention in my introduction is actually that in our research and development efforts, we founded a channel, and we've become one of the biggest channels in about finance and insurance in Germany, with 180,000 followers. with millions and millions of views, and one of the, I think, top 100 channels and numbers of released videos worldwide. I think thousands and thousands of videos we have released. And my learning is, and by the way, and also we manage the TikTok accounts of several global insurers and regional insurers. And what our finding is it's like candy it's like a kid in the candy store. I'm sorry, the reach is so insane. You know, I do a video, 10,000 of people see it. You can really increase the contact to your target group. You can generate leads. We have one client that relies heavily on performance marketing, also on TikTok, and they generate leads for a fraction of the cost they did before, for a very complex financial product that's way more complex than most insurance policies are. So I think TikTok is one. People always ask me, what's the next big thing? I say always, guys, focus on the big thing that's currently there. And I think it's sales, B2C sales. It's currently TikTok in different countries around the world. The reach is insane. Again, we reach up to 20 million people each month. And even the most conservative C-suite in Germany understands when I say that number, that they understand with no budget and with too few hair and too much weight on such a platform to reach such a reach. It's insane. And I'm not here to brag about myself. It's only about to understand the potential of this platform. And we have a fun fact by the side. We even have, now branded clothes in his shop. And, I'm an insurance expert with a B2B company. And we have now here a CEO of Digi, which means like bro in German, a brand store. We have events with hundreds of people. And again, this is not to brag about me. It's about to brag about the potential of this platform. I think you, as insurer, as agent, as large sales organizations, you need to be there. We see this also with brokers, for example, or agents that do that for their region, and they're making massive business with that because they have the massive reach. But one warning, this will be over. And at some point, to say I'm now on TikTok is as ridiculous to say now I am on Facebook. You need to really be aware of it. There are these cycles, and now it's the time to go. Please don't do one mistake, as a lot of people do. Just dump videos from other channels. That doesn't work. TikTok has its own rules, own consumption, own culture, and it's a tricky place. But if you're there and you know what you're doing, it's a fun place because it's free reach, and free reach is in the insurance industry free money. And who has something against that?
That's interesting. Robin, your works in this domain are quite amazing. You're always vocal about, how the internet is transforming the insurance sector, especially the insurance sales. You've touched upon TikTok and, how it's a unique platform. But what are your thoughts on the future of insurance sales? Is this the way to go?
Well, I thought 2 or 3 years ago that agents and brokers will have a real hard time. Everybody's going to sell everything online. Funnily enough, I have still my Wolfgang. Wolfgang is 20 years older than I am. And we see it also in the numbers that agents and brokers are not dying. Certain segments are that are those who are not super efficient, those who are not super specialized. We see these numbers go down, but the other ones and the very good ones not. On the other hand, I was an agent myself. So I think very good agents and brokers, they can sell in the Middle Ages, now, on Mars, I think everywhere. But what I think the interesting thing about digital content, independently of the platform, is you can do one action and reach many. And when I was an agent, I needed to call one client. I wrote an email to one client. I visited in my car one client. What I can do with digital content is I create something that people really are interested in, and then I can send it to thousands or millions of people. And I think that's something that can scale successful salespeople. So I strongly believe, and that's, by the way, something we have whole academies for Salesforce for that, is you need to become a micro-influencer in your community. It can be an ethnic community. Good friend of mine, he is German Croatian. He insures every German Croatian in Germany probably, or somebody who's diehard Hamburg Sports Club fan and who is in that community. You need to be in one community. You need to become the insurance guy in that community and sell everything that's super easy to sell in a very digital way. But there are complex products like certain liability things or business insurance, business interruption, and other topics that are super complex, or the overall consulting aspect of selling insurance. But I think you need to become a micro-influencer, and you need not to be on TikTok. you need to be on the platform that makes sense right now. That can be LinkedIn, can be Twitter, can be TikTok. But you need to be fit into that. And when a new one comes up like Clubhouse, you need to be the our number one. Also, you need to be the first to pull out when you see it doesn't work. You need to train we call it attention hacking. You need to hack the attention of your target group, of your customer base. This can be a single broker, it can be a sales organization can do that, or an insurer in the direct business. And I think that's something I will see. What we will not see anymore is agents and brokers that don't do any digital content. I think that's the way to go. And what we won't see is insurers that don't do any marketing. Yeah, because of course we have a lot of money, but if you pour it in TV campaigns, and what do you guys do when you see a commercial on TV? Are you sitting in front of it and say, oh, that's interesting, or are you doing like this? And we are still paying the money as if people would actually watch these commercials nobody likes. I mean, the worst commercial I saw in the insurance industry is actually was a big role model, Usain Bolt, a great guy, great story, unbelievable sports person, and he's running through his home, and it's very nice. And then suddenly there's the Allianz logo. What does that have to do with insurance, or with me as a person that I do not even know what kind of household insurance I need? So I think it's you produce one creative for many, these times over. You need to produce many creatives for a lot of people that can relate to that. So micro-influencing, creating a ton of content, and go away from this one-size-fits-all movies and ads. I think that's over. So future of sales, yes, but totally different.
Thank you, Robin. Let's talk about underwriting. Derek, what trends do you see in the insurance underwriting and overall in this sector?
That's a real tricky question to answer. Without doubt, it's the non-traditional capital coming in, which is looking at things in a pretty refreshing new way. I think the products that are going to be the market leaders, the ones that happen with an increasing frequency, are going to be near-term risk covers. So by that I mean, if you've got your Fitbit on and that's measuring your heartbeat, that sort of medical information that's being provided, those are the things that are actually going to be able to be pushed into an insurance product, which will become the mainstay of our digital platforms going forward. There's critical data that we haven't even tapped. I mean, Robin was mentioning about the mobile phone, that everyone's on that rather than watching advertising. Well, we as the insurance community selling personal lines insurance just haven't tapped into that in any shape or form. So underwriting's got to get its act together on the data that's available. I mean, it happens so often whenever we search something on Google, 10 minutes later 3 adverts of the aligned products pop up in there. Well, we're just not taking advantage of that at this stage. So I think our penetration through some of those platforms is something that we've got to work incredibly hard on. But yeah, it's near-term data management and the things that we really haven't provided products for in the past. I mean, it may be that you can buy cyclone cover in the future when you see one brewing up offshore. Because of that near-term data management, people actually, I need to buy some cyclone cover. I haven't got it on my current policy. I'm just going to go and buy it. That would have never been available before, but with the information that's at underwriters' fingertips, that may be a product that's able to offer. It won't be cheap, of course, but that's the sort of thing that could be out there. There could be some real innovative changes, and I think those are the things I see happening that insurers will spend a lot more time thinking about.
I believe underwriting, Shamir, is a classic case for a product from the product perspective. Products are like either yes or no. Underwriting comes in maybe situation. So underwriters primarily are solving maybe problems. And no offense to Derek, I'm sorry for that, but chunk of the cases, underwriters go in by the gut feeling, because they also don't have the capability to actually build an insight out of data, and they don't know the value of risk management then. So underwriters majorly fall in a maybe case, and then the decision or the rules which get written are wired here, not in any systems. They take a gunshot on, say, yeah, I will try this. If this risk is going to go through, I'll make a difference. Otherwise, loss ratios and other things will kill the underwriter. So they are also looking at that piece of it. So my 2 cents on that, the underwriting, I mean, as we evolve, has to be data driven. I mean, it should not rely on a person. It should be data driven. Otherwise, it's a gut feeling which is humanly wired. That's it.
No, I certainly wasn't suggesting that it would be a manual way of doing things, that it would have to be an automated solution, because as you rightly state, no underwriter would have the mental bandwidth to be doing that. And actually, I think probably the stress of doing it with an approaching storm would send a few of them over the edge anyway. So this has to be an automated thing. And it's a bit what I was saying earlier, it's the fear from the C-suite about letting insurance technology run amok. But at some point, someone's got to control that and actually utilize it, because it's definitely something that will work for the customers. And ultimately, if the pricing is right, it's a new product out there that can only be accretive to bottom lines.
And correct. I mean, and I agree with you, Derek, because if you see underwriting maybe cases, the edge cases of maybe are always protected by reinsurers. So underwriters takes a risk of a maybe case defended by reinsurer.
Thank you. So the last question is for the panel in no particular order. Anyone can answer this. Maybe everyone can as well. It's kind of rhetorical, but I wanted to ask this question anyways. So what are your thoughts on AI, data analytic technologies in the InsurTech domain? And do you think insurance players need to invest in data engineering to future-proof their business?
Because I think, I totally agree. Like you need to base your decision on data. The problem lays in the same dependency on legacy. So a lot of insurance companies are very impatient and they want to prove out data science and AI immediately, but without having done the ground data work first. There is a lot of hype in this space, and you get one CEO who wakes up say, okay, let's do something like AI driven now. So and this happens everywhere. So our advisor Democrats, after having helped insurance companies start with the basis really is first invest in a very robust data model and digitization. And those are the basis to build data science, to build AI on top of it after. You cannot jump too far if you haven't done that to begin with.
Thank you, Michaela. Anybody else wants to share their thoughts?
I think before we can talk about AI and data, I think we need to clarify also with all decision makers, using an Excel spreadsheet also with the most complex formula is not AI. If you really, and again, let's look outside the industry. I've worked for online gaming companies that were able to predict the profitability of customer cohorts in the 10th of a percent. Or predict customer behavior. Amazon is able to predict, and they're actually managing their whole logistics with prediction of what will people order in the future. It's unbelievable. I actually yesterday ordered a coffee machine, and yesterday night, and today it arrived. I mean, this needs to be, if you think about this in an era with millions of people. What I want to say with that is, I totally agree with Michaela. You need to lay the foundation of it, but before that, you need to understand that data is a very powerful tool. And I know this sounds not like blah blah, but when we are able to actually predict claims, we are spending $2 trillion each year on claims. imagine we could lower this 10-20%. It's not only we are going to save lives of our clients, that's a good idea, but also we are going to save a lot of money. And those insurers who do this first will make billions and billions and billions of dollars. I know one example of a AI-driven startup from Israel who's able to predict the likelihood of car-insured applicants if they're going to have a claim or not by data they scrapped from social media. And they were able to lower their combined ratio from 90-something%, which already in Germany would get a medal for. But they were able to lower it to 54 or 52%. I mean, these are billions of euros and dollars when you're able to pull this off for a large insurer. And so lay the foundation, but understand that's a total different way of working. Open the door for predictive analysis, for predictive claims. And also, let's not forget the client and the customer to help them prevent claims.
My 2 cents here would be adding on to what Michelle and Robin talked about, lay the foundation. But I mean, I would suggest partner with the new age tech InsurTech players. They are doing a lot of things basis the data. So foundation is one, but problem is your historic data is a piece of junk. So reality is a reality, and you have to throw away that data. You will never get an insight. So AI will not work. AI will not work because of the quality of data. So it will not work retrospectively. It will work prospectively. So even if you lay the foundation and the volume of data, AI will not work. I'm telling you the real fact. Insurance industry, even if you merge the entire US insurance industry, one line of business, AI will not get trained properly. You have to source a lot of data. Like Robin talked about social media. Now, social media, in terms of the behavior of their customers, if that gets mined, you have to find sources of data wherein you can make your insight more powerful. With the way we have data and the quantum of data, AI models will not properly even get trained. Can you believe oil industry from one sensor generates 50,000 data sets in a minute? And that's where the AI runs, because the quantum of data is there to build that kind of per minute. So insurance industry has to reach there. And being from a technology side, I'm telling you, I mean, no matter I take up India and China as a population and put the entire auto insurance data, training the model will not give you, I mean, you'll get higher premiums than the traditional model, because traditional model you have to get more sources of data to train the AI. That's one. So AI, analytics, all that are jazzy words. Get the foundation in place. But again, I'm repeating Michelle and Robin's stuff. Get the foundation in place and collaborate. Collaborate with new age data players. It's not from your industry. Collaborate with Amazon, collaborate with Google. They have the data sets. Build partnership for you to sustain and survive. More than that is building more partnership rather than competing. Work together to create a new way of doing things.
Thank you. Thank you, Anshul. So last 2 questions for the day. One is from Robert Henry. So do you think this pandemic has helped the insurance sector to sell more insurance products? Who wants to take up this question?
Definitely, I have shown statistics of US and Europe in one of my slides, that there is definitely an increase in because see, again, insurance is more people go for insurance when they are seriously into trouble, and pandemic has definitely added a good amount of issues. So when you will see health insurance seeing a spike, motor insurance getting more rubbed off by people asking for more discounts. And I was reading a statistics, US alone has given back to its auto insureds $10.5 billion because they were not driving the vehicle during pandemic. So $10.5 billion has gone back to the customers. So yeah, I mean, there definitely there is an increase. Life insurance definitely in pockets you've seen, and I have there, it's in one of my slides.
Thank you. And the last question is from Will Hennon. His question is, are there any trends or approaches that you've noticed in the insurance risk mitigation area?
I'll touch base on this question. I'll just add up some points on this question on the risk mitigation area. Just I intimated earlier on the data prediction. Okay, if we have the clear data in place, for example, if a particular in a motor policy, if the driver age between 20 to 25 is doing lots of accident, if you have the clear data, you can do the risk mitigation plan on this. Okay, if it's between 20 to 25, I'll be loading the premium. Okay, the data speaks here. And when it comes to what I can say, all the data speaks here. When it comes to claims module, okay, instead of doing the manual survey, I can implement the e-survey where the manual error of activities will be mitigated here. I'll go with the e-survey. I'll automate the complete process where the minimal impact of the human comes into the picture. I can do everything starting from the intimation of the claim. When the user intimates, the complete workflow goes through the system without any human intervention. That's how we have done the risk mitigation plan.
Thank you, Kishore. Once again, thank you to all the fellow panelists. I personally enjoyed it. It was fun, and I had a lot to learn from you all. I'm sure the audience who has joined us had a lot to learn as well. I hope to have another session with you all soon again. Thank you once again, and good evening.